Something scary just happened, and mainstream media is trying to bury the story.
Welcome, everyone. I must apologize for dragging you all here at such an uncommon hour, but from what I've been told, this matter needs to be dealt with urgently. So urgently, in fact, probably should have been addressed weeks ago, but that is spilt milk under the bridge. So, why doesn't somebody tell me what they think is going on here?
Like Winston burying a bone as an everyday occurrence. But there is really something big happening here that will affect your investments and your job. And by the end of this video, you will understand what the real impact is and how to protect yourself from it. Last October, when the wounds from the March 2023 bank failures, surpassing the global financial crisis in total assets and sparking the latest Fed intervention, were still fresh, I made a non-consensus prediction. There will be more bigger bank failures. In March 2023, the US experienced a wave of significant bank failures that shook the financial system. These included the collapse of Silicon Valley Bank on March 10th, Signature Bank on March 12th, First Republic Bank on May 1st. These banks succumbed to a combination of poor risk management, I mean incompetent management. They all bought lots of long-duration government bonds and a rapid rise in interest rates, which devalued their bond holdings and triggered liquidity crises, which is a polite way of saying bank runs. Following these, more banks have failed, including PacWest Bank on July 25th, Western Alliance Bank on August 10th, reflecting the ongoing crisis in the banking sector.
Good morning. Maybe you could tell me what you think is going on here. And please, speak as you might to a young child or a golden retriever. It wasn't brains that got me here, I can assure you of that.
What I want you to understand today is Norinchukin Bank, Japan's fifth largest bank, holding $840 billion in assets. And it is known for its significant investments in collateralized loan obligations are financial instruments that pool various loans typically issued by businesses with low credit ratings, and they slice these into different tranches based on risk and return profiles. And while these collateralized CLOs, let's just abbreviate them, can offer high returns, they come with substantial risk, particularly if the underlying loans default. This is the same kind of structure that caused the 2008 financial crisis. Instead of mortgages, this time it's business loans. How does this work? Well, interest rates in the US and Europe have increased to fight inflation, leading to a decrease in the value of bonds. This situation has caused significant losses for banks holding these bonds, including Norinchukin Bank. These losses exist on paper, but have not yet been realized through actual sales of assets.
And Mr. Sullivan, what does your model say that means for us here?
Well, that's where it becomes a projection. But,
You're speaking with me, Mr. Sullivan.
well, sir, if those assets decrease by just 25% and remain on our books, that loss would be greater than the current market capitalization of this entire company.
Norinchukin just announced plans to sell over 10 trillion yen, which is $63 billion worth of its holdings in US and European government bonds. A panic fire sale like we last saw in 2008. Now, the Fed has known for some time that there was danger brewing at this Japanese bank and gave them access to its bailout program intended for US banks. That program is called the Fed's Standing Repo Facility, a mechanism that allows banks to exchange their securities, their bonds, for cash on a day-by-day basis, ensuring liquidity is available in the financial system. It's highly unusual for a non-US bank to be given access to this facility. Another clue that the trouble is worse than first appears. The planned liquidation of Norinchukin's foreign bonds could have a very significant repercussion on the bond markets, given that Norinchukin, I love the name, holds a substantial portion of Japan's foreign bond investments. Its large-scale sales could influence bond prices and market stability. Japanese investors hold approximately 1.2 trillion in US government bonds, making them the largest foreign holders of these bonds. A rapid sale of these treasuries by Norinchukin and other Japanese banks could lead to a sharp decline in bond prices and a spike in yields, potentially destabilizing global financial markets. Worse yet, all US banks who hold US treasuries would see the value of these treasuries fall even more. Now, the Fed's bailout fund from last year, which explicitly covered this, was closed in March 2024, meaning there is currently no backstop for this scenario.
So, what you're telling me is that the music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism.
Sir, I'm not sure that I would put it that way, but let me clarify, using your analogy, what this model shows is the music, so to speak, just slowing. If the music were to stop, as you put it, then this model wouldn't be even close to that scenario. It would be considerably worse.
Maybe you don't care about banks collapsing. Government will bail them out, doesn't really affect you. You know, who loves a banker? I used to be a banker, but just don't tell people. And how does this therefore affect us in the real world? Well, higher yields mean that the cost of borrowing increases for the US government, businesses, and consumers. This leads to higher mortgage rates, more expensive car loans, and increased credit card interest rates, which slows down economic growth. It also makes investments by US companies more expensive. Additionally, higher yields lead to a stronger dollar, making US exports more expensive and therefore less competitive, widening the already big trade deficit. And all of this is happening when the US economy is already showing signs of slowing. There's a Swiss bank called Credit Suisse, which faced a collapse due to a series of financial missteps, incompetence, risky investments and scandals, and the bank struggled with a massive loss and a loss of investor confidence, culminating in a liquidity crisis, much like we've seen with the US banks that failed last year. And the Swiss government intervened, forcing UBS to bail out its rival Credit Suisse in a move to stabilize the financial system. UBS's acquisition of Credit Suisse was a last-ditch effort to prevent further systematic risk and restore confidence in the Swiss banking sector. This situation mirrors the challenges that are now faced by Norinchukin Bank, with significant exposure to high-risk investments, the impact of high interest rates. Now, to get a little bit more context, back in the immediate aftermath of the global financial crisis in the year 2009, Norinchukin Bank posted a final loss of about 570 billion yen due to write-offs caused by the global financial crisis. The forecast loss for this year by the same bank is expected to top the previous record by another trillion yen. That means this is 3 times worse than 2008. Now, Norinchukin's management statement says this: the fire sale, they don't say that part, will, I quote, improve the bank's finances and portfolio, thus enabling to move into the black in the period ending March 2026. Spoiler alert, no it won't. And that's why the bank is now scrambling to share the pain with even greater fools, investors. According to the Nikkei, Norinchukin Bank is considering raising 1.2 trillion yen to shore up its desperate finances. It has already started discussions with Japan Agriculture Cooperatives, one of its main investors, and others. Of course, the question of who in their right mind would lend the bank good money to plug an even bigger hole that is about to open up is anyone's guess. But that won't stop the bank from doing what it has to, now that it has picked the liquidation route. And once the selling flood begins, it won't end. As the wonderful movie Margin Call laid out so very well, once you realize that the music has stopped, you have three choices. Be first, be smarter, or cheat. In the case of Japan's Norinchukin Bank, it has decided time has come to liquidate before everyone else. If you want to learn to protect your investments from the next market crash, then watch the video linked to at the end here, in which I break down step by step how you insure or hedge your portfolio for free. And if you want to learn how I make money work for me, you may also join my live trading training this Saturday at 10 a.m. London time, or next Tuesday's live trading training at 8 p.m. New York time. Just depends on where you live in the world. If you enjoyed this video, share it with a friend and let me know your thoughts and comments down below. Felix here, and Tallulah, my trusted financial advisor, and we're going to teach you how to never lose money again. And no, that's not some sort of scam or a con or an overpromise. It's actually possible. I'm going to teach you what hedge funds do. I used to be a hedge fund strategist for a little while. I know a little bit about it, and there is a very simple